Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief. Daily, don't have any chicken sounds for you to start the video, but I'll try my best. Daily Brief, Daily Brief, Daily Brief, 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 Brief. Whatever. Anyway, how's it going, you out there in YouTube land? We'll do one of these. Did you see the price of gold? Oh, my goodness. Crazy world. Hey, we've been a little bit scatterbrained here this morning, at least I have. And of course, geez, crazy ass action in the marketplace. And I think crypto influencers are actually literally manipulating the price of Bitcoin here. So be very, very careful, boys and girls. This is a dangerous market state. I'll try and do your half-hour summary here for you, but understand that the whole market is in flux right now. And interesting how crypto influencers can push around price of Bitcoin pretty easily with nefariously created, I don't know what you call them, MS Paint documents or whatever they say, Photoshops of CZ indictments and stuff like that. I saw that last night, which kind of pushed the price of Bitcoin around to some pretty crazy levels. And unfortunately, we are doing some serious technical damage to the charts here. So, be careful, everybody. This is not for the faint of heart. And if anything, what I'm a bit concerned about is, over the past, let's say a few weeks or so, we were humming and hawing, but the market may be moving up. And, as you can clearly see from our algo, the market actually technically is getting overbought. Our fast indicator on the S&P 500 now sitting at 89.2, so we are well above the overbought zone here. It's just really a question of how long does it take for the slow to sneak its way up. It doesn't have to go up a hell of a lot further. And keep in mind the slow is like a 30-period moving average, so you could actually have price on the ES just sit sideways, and this thing will just grind its way up into the overbought zone. So we're no longer in that sort of, hey, frivolity, nice and easy living. Market should head higher, seasonality, buy when it snows, sell when it goes, all that kind of talk. Yeah, that story's getting a little bit old now. So, caveat emptor. I definitely think that's definitely got to be the message du jour. Probably not a bad idea. I don't know how to quite do this on the fly, but I don't know whether I did it for the free video. Of course, we do a lot of these charts and sort of analysis tools. For the Afterparty, I can never remember whether we sneak these things in for the 30-minute summaries. But if we look at the price action from the first quarter of 2023, just to get an idea of what the fund managers think the economy is, where the economy is in its cycles and all those kind of fun conversations. Clearly, we had money for the first quarter, and this is April 3rd. I mean, we can even back that up a bit. There we go. There's the end of March. Money was flowing out of everything other than tech, communication services, discretionary. So where does that put us on the economic cycle? This is actually the market telling us, people are buying these assets because these assets do well in specific environments. What specific environment are we talking about? Technology, discretionary, communication services. Oh, that's all full recession, market bottom. The one sort of interesting piece to all this, if we go down to what's the backstop, and actually we'll have our stock pickers club meeting tonight, Tuesdays. Love getting together with that group, our TRI Secret Options Formula Club. These guys are very, very smart market participants. David always has a very lively conversation with the group. But in this part, right, we should see consumer expectations reviving. Of course, we did see that the things like University of Michigan consumer sentiment numbers and European sentiment getting a lot better. Industrial production bottoming out. We actually did see a bit of an uptick, but I don't know about that. That's a bit of a tough one because the industrials are getting kind of chopped apart here this morning. Interest rates falling. Now it is interesting, no pun intended. We do actually have the long end of the curve. One thing that really jumped out at me this morning, I couldn't believe it when I saw this, but you know, it is what it is. The bond market has just been on fire here the past couple of days because we're getting some economic reports that are coming out that are basically showing that the Fed is getting exactly what they want. I put out a quick little tweet here just before we got the video going, kind of outlining, please understand that jobs and the employment situation is always, it's the most lagging of indicators. It always reports last. And of course, the Fed's mandate, well, we want price stability plus maximum employment. So as a result, they're almost always focused on the lagging data, the stuff that's always at the very end of the data set. And actually, there was a YouTube video that I made reference to yesterday. An economist there that they were interviewing. That person basically outlined that actually one of the key data sets that they look at the Fed is actually an incredibly lagging data set, the effective housing costs on CPI. So they're always behind the curve. But the point of the matter here is, the data is now starting to scream at us. Something like the Purchasing Managers Index, this would be a forward guidance. And you could see it M'd out. If you've been watching my channel for a while, you know how much M's and W's are important to us. So you can see the M. So when they started to raise interest rates in the face of all this insanity, and, this socialist kind of got run out of office there, and the right-wing, sort of more conservative part of our society took over the U.S. Congress there last year, I think a lot of people were like, okay, enough of this insanity. Druckenmiller, a guy I highly respect, was like, you guys are killing us. Why are you doing this to the United States of America? And I think Mr. Powell got a very stern warning from that 1% sort of family office type part of the USA. Hey, quit, carrying out Klaus's plan, and let's get back to making America great again, right? Mega and all that stuff. Anyway, point of the matter here is this, I would say, is actually your leading indicator, and it is just collapsing. We're now approaching levels that we were getting into through the whole sickness crisis. I don't hear anybody going, oh my God, I'm going to sacrifice my life to save capitalism, right? So it just clearly shows that they really juiced us. This was a very, very manipulated market state here. Remember I said Bitcoin price, even right now, I see it being manipulated even by crypto influencers. Highly, highly manipulated market right now. And Julian, I love Julian's expression, right? This is PvP mode. Everybody is out to eat everybody else's lunch. It's a nasty, nasty market state. Anyway, so economy is contracting and below 50. This is a major warning sign, folks, that the economy it's technically in free fall. And now, finally, you've got your jobs data. Of course, this is what the Fed's watching, right? And they're finally like, okay, we finally got this employment sort of picture rolling over, and you can see the rate of change. You can definitely see that the momentum is to the downside here. So we'll see how this plays out. And, I guess the tragedy of all of this is in the face of this. This is basic. And keep in mind, Canada is like, it's like a little, it's not a baby brother, but think of it almost like a little baby cousin to the United States economy. Typically, Canada is about 10% of the U.S. economy. And I wasn't able to find U.S. housing data. Believe it or not, actually, the U.S. housing data actually isn't so bad. But in a country like mine, and this is the biggest bank in Canada, on their website, right across the front of their damn website, is the headline, "Buying a home has never been so unaffordable in Canada." And here is their data set, RBC housing affordability measures. And look at what's going on here. So, it's like the oligarchs are setting us up for absolute disaster here. And, my message here is I wouldn't be surprised if we're actually going to head back to the world of Hoovervilles. The economy is definitely contracting. You can now see, people are going to start talking about their jobs and, job scarcity and not having much money. And at the same bloody time, the Klauses, the substitute drama teachers, have done this to our society. Now, as I said, actually in the United States, it's not as bad, but I am so embarrassed to be a Canadian right now based on what these people are doing. And this can't end well. This situation cannot end well. It's just, what a nightmare. Anyway, so, there's kind of just a little snapshot of how crappy this situation is. Having said that, I mean, we gotta do what we gotta do here. The headline, and we're supposed to talk, econs, news drivers, all that kind of stuff. Well, I mean, the econs coming out today is, the Fed has actually gotten its wish, and it's starting to break the employment market. So just be aware of that. The interesting thing with that, though, is that if the economy is actually breaking and they're going to be more unemployed, that can't be good for the economy in general. So what a big surprise. Gold is taking off like a rocket here. And interesting to see things like silver doing very, very well. But as a testament to the fact that these are inflationary concerns, what you actually see from the professor of economics, and I found this fascinating, the professor of economics is saying, people, we have a major problem here. So there is the professor of economics. So you tell me, what is the professor of economics saying today? I don't think the professor is very happy. Interesting, we could probably do some Feigenbaums on here just to validate levels. Oh, what a surprise. So we stalled out at 2.618. It's almost cliche when I put these darn charts on here day after day after day, and you see these levels play out. It's shocking. So, professor of economics, you can see the big M up top here. I suppose we could probably also do a little one off of there. But it looks like the professor of economics wants the price of copper to go right back down to these, I guess, what is that, early March lows. If we zoom out on a higher time frame basis, interesting how, looking at something like the daily chart, we actually got a progression of lower highs and lower lows, and there's that M that just came in there. So, if we do our Feigenbaums off of there. So, professor of economics is screaming trouble here. And it does make sense why gold is moving up as much as it is. I mean, look at that darn chart. I did hear somebody talking about bull flags recently, but in other markets, I'd have to say that's a pretty darn impressive looking bull flag. And just in the near term, I don't see any reason why we don't hit 2100 here. And now we could probably even do like Feigenbaums off of this range. And we get to, oh boy, look at that. I love when you see this is the definition of confluence if there ever was one. And my hunch is off of this old range, if we actually do things like 127s, 113s, probably 127s probably the way to go here. We're probably going to see that lines up nicely with those Feigenbaums. So there's 127, yeah. So 127, 4.669, 2.618. I'm starting to see a lot of confluence for the gold up here around 2200 and change. Very, very bullish picture for gold. And it's interesting because we have been talking about this recently, things like Newmont mining. Probably not the best to see it here. I suppose we could talk about silver in a bit, but maybe we'll get into this in the after party. I have talked to you guys a little bit about Newmont in the past. Newmont did very, very well in the 1980s, and I suppose we could probably do Feigenbaums off of here. Where are we here? Chaos. Boom. There we go. So if anything, what this is probably portending, if we do go up through the top here, which I don't see why we wouldn't. Bit of a gap up there at about $74 a share and 77's a Feigenbaum. I don't see why that wouldn't happen. But what's really interesting about Newmont is if we go back into the 1980s, you notice, now we got to go way, way back here. There's the 1980s. I get the feeling that what you've seen out of Newmont just over the past 5-10 years is this kind of action, just getting set up for this moonshot. And, you can see it went right off the darn screen. I mean, look at what Newmont did right into like 1987, right? And there was a big crash in the stock market in 87. The market just got bid up crazy, but I wouldn't be surprised if we get a scenario that's very similar to that. So back to current market, you can kind of see that same sort of pattern. And are we looking for that moonshot up top? I am. And that's going to take us, even if we use just this big range right here, something like a Foggenbaum off of there, you can kind of see where this thing wants to go. And this has actually been confirmed, right? We have broken up through the top there. Look at that, the numbers right off the damn screen. So, interesting. Just off of this range, notice 877, 2.618. There's that confluence stuff again. So, and actually, you know what? Here's a special treat for you. Here's a stock. We were talking about silver there just a moment ago. I mean, this thing's setting up just as we speak. In fact, I was talking in the day trader room. So another gentleman who was in there is a wicked silver bull. And I was like, well, dude, there you go. I mean, it's staring you right in the face. What letter of the alphabet do you see, folks? Do yourself a favor, man. I'd go and pick up a couple shares of this. And the cool part about it, I mean, I'm an open book with you guys. So, there ain't no secrets with me. You can see exactly where my price objective would be in the short term. And oh, gee whiz, look, there's a big old gap right at that level. What a surprise. And then if this thing really does get going, oh, look, there's a trend line off at the top, and there's a fucking Bob level sitting right there. So if anything, probably want to talk to the gang tonight in the Secret Options Formula Club meeting about maybe bull call spreads, something like a net debit spread trade, maybe like buy the 24s and write like maybe the 30s or something like that. What a bullish looking chart. Holy moly. So, weak employment data. But at the same time, too, we still got banking crises. Cartels trying to manipulate the price of oil. Of course, that idiot there in Eastern Europe murdering people on a daily basis. Winnie the Pooh now, of course. China's kind of out of the mix. We used to, for the longest time, say, well, China's a deflationary effect, right? They're bringing in prices down across the board, taking price pressure. Well, that story's old now. That's gone. You put it all together, and I guess it makes sense to see why the silver and the gold are taking off. And at the same time, too, though, the professor of economics, copper, not very happy here at all. What time is that here? 20 minutes past the hour. Didn't really have any day trade set up for me in particular. One thing that I did notice that actually, just before we get into the day trading, haven't seen this in a while. I haven't actually been following this too closely because it kind of disconnected through the whole COVID nonsense. They really, the whole sort of runaway money printing and, shouldn't we debate mortgage if we do? Shut the fuck up and give them all the money they want, right? The whole economic picture, everything got all muddled. If anything, for the longest time back, I think it was in the 90s, if I'm not mistaken. It might have been the early 2000s. We had a trade where it was gold, yen, and bonds all moved in unison. And that's where we sort of got this sort of risk off kind of proxy where if gold and Japanese yen and the bond market all moving up, of course, if bonds are rallying, that means a disinflationary environment. And I might argue that, that's the case. I mean, you saw the professor of economics. That's not inflationary. You see that ISM data. That's not inflationary. And now the jobs market's rolling over. That's not inflationary. If anything, that's painting to like a weaker economic condition. So does the Fed finally start to actually talk about maybe ending their war on the economy and when ending their sort of rampage of higher interest rates? It would make sense according to this. Like the fund managers are all piling into tech, discretionary communication services. That was the theme of last quarter. There's no doubt about that. You can't argue that. This is in the books now. It's there. It's a fact. Of course, you've heard me barking about Intel recently. Jesus, I missed a good trade on that damn thing. And is the theme to begin the year, to begin the second quarter, has that abated at all? Here's March 30th. This includes, actually, this does not have April data. But you can see even right at the end of the month, they got real estate outperforming, which might be a little bit of an anomaly. But then, here is discretionary and communication services, which again there's real estate over here. There's technology, there's discretionary, right? So that's basically, we're right on the cusp of this line here on the forward edge or the leading edge of this cycle chart. So I think the thing that's missing here is, has the Fed officially said, all right, enough is enough? And we'll start calming down. And our anecdotal evidence that maybe we're still here is the yield curve is still very much inverted. I don't know whether you guys, again, I don't know whether I showed you guys this in the public. Well, where are we? And I got to give a big shout out to stockcharts.com. I mean, they do excellent work here. Dynamic yield curve, you can see it's still painting inverted. And as I showed you earlier, the bonds on that weak ISM data and all that kind of stuff. And actually, interestingly enough, the oil market couldn't hold on to its gains and actually started to roll over here. So if, like the cartel tried to manipulate prices higher, but you can see the cartel's efforts are not going very well here. Something happened to their bull market. It's stalled out here. So we'll see. I mean, technically that is still higher highs and higher lows. This might just grind its way higher. But the cartel wanting to get price up, that's not going the direction that they want. And keep in mind, too, this is with a monstrous price gap. So you might just find that the darn oil market just rolls right back over. You can see it's down 19 cents right now. I mean, you see the gap. It's huge. There's also a foggy. This is also, of course, Collins. In this case, it would be the dump chaser zone coming up against all these horizontal support and resistance levels, 200 SMA. Not a big surprise we ran into some traffic here, and the market's seeing some sellers. Also, too, this is a really good lesson for you guys. Hopefully you've heard me say this repeatedly, that gold and oil can't move the same direction on the same day. Usually they just don't like to do that. It's either one or the other. So clearly today's gold's day to shine, and oil's taking a back seat, which makes sense. I mean, very rarely do you ever see them move up together. I suppose the only other thing that I would add to all of this is, stock market wise, we are basically back into a selling zone, right? If we just do something as simple and clearly this head and shoulders, oops, I screwed that up. It might be as high as that. It'd be interesting, like I said, tonight when I meet with our stock pickers, my hunch is David, and I do see David posting there in the lounge, but my hunch is David's probably going to be mentioning the fact that we've basically come back into what I would consider a shorting window. Of course, and I love this. If anything, this is probably going to be my hallmark of 2023. It seems like almost every single year I have one concept that I just latch onto, and it's the theme of the year. And this has got to be the BFF. This is your BFF year if there ever was one. Look at that. If you had just had the balls to strap on a short there and say, okay, I'm going to risk against this M top, you're looking like a genius right now. Oh my goodness, drive you crazy. So anyway, everybody should learn your BFF. And then as I sort of said there a moment ago, if we're looking at things like the breadth, you can't make the argument that this market isn't overbought. We're actually getting overbought here. So I actually posted in the lounge. I kind of said, seeing a top come in here at these levels, this would make common sense. Then we'll sort of bring this full circle. I do find it interesting that, what's happening with the corn? Are we going to get a third week of doji here? Drive everybody absolutely crazy? Wouldn't surprise me. Did notice yesterday, things were looking very toppy. I did have some, and of course on the daily charts, we're still dealing with this megaphone. Remember we talked about this. Willie's stupid. Nobody's got any business coming in and buying the Bitcoin up here for investment purposes. You're just asking for trouble. And now we actually are starting to get smiles start to actually confirm here, which was sort of my worry of late was, how bad was this going to get here? So smiles, and I even put out a tweet, a most interesting level. Yesterday, there was a big dump in the Bitcoin crypto market. And if I understand correctly, and I don't know whether I do because half the time crypto just moves purely on speculation. But if I understand correctly, there was a fairly significant crypto influencer. The guy goes by the name of Crypto Cobain. I think his name is, I think he changed his Twitter name to Kobe or something like that. And he basically, if I understand correctly, he like photoshopped and I might have this completely wrong. So please correct me in the comments down below and all that. Hit the like button, subscribe, all that kind of stuff. Oh, there you go. Somebody actually posted in the lounge. Was that Sharky? I can't. That's the one thing I don't like about Discord is when you click on the images, you can't see them. They're so darn small.
Also,
Let's see
Brian,
what I
FYI.
have here. I start to scale in below reload zones. Oh, okay. That's a different thing. Sharky's telling us his secret sauce on trading. Anyway, I
Brian,
thought I do remember in the lounge yesterday, somebody had pointed out it was like a tweet or something along those lines from Mr. Cobain that, how do I correct this now? I've totally screwed my screen up. Oh, well. So just have to leave it as is. And if somebody can just grab that screenshot, so by the time I finish this sentence, I can just show people on YouTube. But somebody had posted something along the lines that somebody had like actually put together a Photoshop of what's this? Nick says Kobe and locked his Twitter account. He posted a SHA-25 code that you can't read if he doesn't give you the key. But he, quote, accidentally posted it wrong and people could eventually read it. And Chris is now saying we got 5 minutes, so you better wind this free video up here. Okay, so just simply put, we went through these lows on a big panic yesterday. And it would seem to be around some sort of rumor that CZ was about to get arrested or there were warrants or something issued for him, and everybody in the space started to freak out. All I'm going to say is M's are M's are M's, right? We got a lot of nasty, nasty, bearish technical price action here. I mean, don't fight this, people. We always say, what are you supposed to think if you see the market smiling at you? So it's incumbent on the market now to go and W and break all of these M's here before I can start going, okay, the coast is clear, everything's fine. And remember, too, that this is all happening right up at the top of a megaphone. This is technically where the market is supposed to fail. If it's going to fail, it should fail here. So the fact that we now have these M's all coming in here, be careful, everybody, please. This has got trouble written all over it. So, as I've said previously, the easiest way to negate all this is just take here we are at what, 28,000? Just take the market up to 29,500, 30,000. What's this, like $1,500? Big deal. And then all of this conversation just disappears. The fact that all they did was they just dead cat bounced, rallied this right back up into resistance. And I actually think, and this is where I was sitting this morning, I didn't pull the trigger last night on that dump. I had a cute little long on. I had my stop at scratch, so boom, that got blown out. Then the market consolidated, and we had a bear ABCD that would point down into this target if we rolled over here. And we had a bull ABCD. If the market bottomed, it was going to point up top here. Well, you can see what happened. They did point her right back up top. But again, this is incredible. Like I said, I think this is the theme of 2023 for Brian. Look where this darn market went and put in a big fat M triple top failure right off of Brian's BFF again. Jesus darn BFF. So I don't really have a problem thinking short from 28,234, but I was chicken shit this morning, and so I was like, all right, I'll throw my order in. When I saw this dump, the M had confirmed. I mean, really, the trade would be just a Wyckoff check, just hit that double top M level and get short there. But I was chicken shit. I had my order sitting up here in this wick, so I missed the dump. Boo, hiss, hiss, boo. But anyway, so bring this whole conversation all the way around, just finish it with it. The irony of all of this is now like a 10-minute chart. I mean, really, all we're doing is just doji, 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 doji. And I've told you repeatedly, well, not repeatedly, but I've told you a few times here recently, it's in these kind of environments that actually a lot of noobs just get absolutely torn apart. And what a surprise. Higher time frame, we're not doing anything here. And in the lower time frame, they're just freaking the kids out back and forth, just driving them crazy. And what I don't like is you can see we're now starting to paint lower highs and lower lows. So if this really is a bull, get your butt back above here and let's start painting higher highs and higher lows. But I don't see that right now. And if anything, it just looks to me like this range is compressing and getting tighter and tighter and tighter. So there's your backdrop. Interesting to see how the stock market's kind of getting punched in the nose here today. Where was that image? Over here, eh? If that risk off message carries any weight, gold ratcheting higher, yen moving higher, bonds moving higher, then we probably should expect stocks to back off, oil to back off, and the corn to back off. Hasn't really come in yet. And I also noticed too that a lot of the alts are trying to perk up here. Don't really see anything outrageous. One thing that I did notice was that Ethereum was breaking out to new highs. Pretty strong move, eh? Up 2.5%. I think it was up about 4% earlier. So, and we've kind of talked about this with the dominance, right? The dominance looks very dangerous here. So in a weird sort of way, do we actually have an environment where maybe things like Ethereum actually work their way higher as we get closer and closer to this Shanghai event? If I understand correctly, now the official lockup of those Ethereum tokens is now, I think it's April 20th that lockup comes out. So maybe this is going to be like a buy the rumor, and then when the lockup finishes, sell the news, and then we dump. I don't know. Tough to say. But it was very interesting to see that outperforming. And if Bitcoin's so bullish, then why doesn't Bitcoin do the same thing? Go out and bust these highs and, show me a new high and I'll show you a buy and all that kind of conversation. Other than that, I would say that, Mr. Musk is up to his old games again. So we're probably going to see some fireworks out of this thing. So actually very sloppy price action. Lower highs and higher highs, but lower lows. Is that making a megaphone? Could we get some volatility come in there? That he was doing things like putting the Doge icon on his Twitter business page and stuff like that. So, we'll see if there's some wranglings around that. And then interestingly enough, I don't know, Stuart, are you on the call with us here?
Yes, I am.
There he is. So if I'm not mistaken, I heard Stuart was getting all excited about his rune. I noticed, and we'll talk in the after party about that, but I noticed that this rune's starting to look very attractive here. Clearing through moving average resistance, momentum strong, volume strong. Get ready, folks. I mean, look at that chart. Holy crap. Does anybody want to get rich from trading? I mean, it's just sitting there. No guarantees from the management, but I've been at this game a while, and oh boy, everything's pointing up there. So we should have a really fun report from Sjord in the after party show here shortly. So if anything, tune in for that. I'd be really curious to hear what he has to say, what's going on in the background, because this thing looks like it's getting ready to rock and roll here. As well too, and I think you guys all know, I've just been accumulating crypto. 23, in my opinion, is an accumulation year. You should get in there. You should accumulate. You don't necessarily have to bet the farm. You could go slowly, nanny nibbles. We have whole plans and stuff about, people that have very, very low risk tolerance. So it's not like you have to take massive amount of risk to get involved. You just got to go slowly. And my message to the public and to everybody at TRI is 23 is an accumulation year. And pullbacks, especially if you can get them down against the low ends of ranges, are buying opportunities. So on that note, I think I'll leave the broadcast at that. I think I mentioned, if you are a silver bull, you take a good look at this PAAS. That looks darn interesting. Not quite sure what I just did there. Yeah. So, caveat emptor. Slow and steady. Yes, it looks like inflation is definitely with us. And now it looks like the Fed's got their desire to try and slow the economy down. And it'll be interesting to see at what point do they actually balk and actually start talking about, okay, we're done raising interest rates. We've officially killed this inflation problem. I don't know. It's a fascinating market dynamic we're in. So anyway, slow and steady wins the race. Hopefully I've told you something here today that perked your interest, gave you some value. Go slowly here, folks. Understand that we are getting probably closer to some sort of seasonality peak in things like crypto and the stock market, and things like even the energy market. You're supposed to buy when middle of February, sell the middle of May. Middle of May is only 1 month away now, so just be forewarned. Interesting too how that Shanghai event's supposed to happen somewhere around the end of April. That would, seasonally, would make a lot of sense. All right. I think we'll leave it at that. Hope you guys got some good value out of that. PMA for the win. All the best. Hugs and kisses. Million 11 prices. Bye for now.